Good evening, and a very, very warm welcome on this wonderful sunny day to you all to the Open Door webinar show from Property CEO. If you haven't been here before, well, my name's Richie Clapson, and I'm here with the other half of Property CEO, Mr. Ian Child.
Good evening, everyone. Hope you're well.
Look, it's great to have you with us, and over the next 45 minutes, we're going to be taking a deep dive into the world of small-scale property development. Isn't that right, Ian?
Certainly is. We're going to be covering some of the latest news items. Also going to be talking to some of the movers and shakers out there who can give us a bit of an inside track on what's happening in the world of property. And we're also going to be shining the spotlight on any areas that we think might be a good opportunity for new developers to take a look at.
That's right. But above all, okay, and this is the rules. This is the rules of the Open Door show. We're going to have a bit of fun doing it because life is very definitely far too short not to. That's what we think anyway. So, but we need you to join in. Okay, so please, it's an Open Door question and answer show. So you need to put questions in the chat box. Otherwise, we're just going to sit with our guest tonight. Yes, we have a guest. Just sit staring at you, and it's going to be no fun at all. So please put them in the chat box, and we'll do our best to get through as many as we can. Ian, what have we got coming up this evening then? Who's our guest? What's going to happen?
Our special guest this evening. Well, tonight we're going to be talking to Mike Bristow, who's the CEO of leading crowdfunding lender CrowdProperty. So Mike's going to be updating us on what's happening in the world of lending, and I suspect how he sees the market. Plus, knowing Mike, I'm pretty sure he's going to be giving us an overview of CrowdProperty, but also how crowdfunding works and what sort of benefits it brings to developers. So if you've got any questions for Mike, please put them in the chat and we'll put them to him.
I can see some people, you're keen as mustard, you guys, you put them in the chat box already. So who's on this evening? Let's have a look. Paul's on, Ben's on, Nike's on. Hello, good evening. Craig's on, Akin's on. Akin put some questions in actually, so we're going to pick those up tonight. Akin, Dan's on, Joe's on, Damien's on, Mark's on, Roma's on. Good evening, Romeo. Wasif's on, Harjinder. Harvey's on, Carolyn's on, Chris is on, Deborah's on. I could go on. Jack's on, Dawn's on. In fact, actually, a few of you I saw were logged on very early. And I think, Jack, you were the earliest. You were on the show at 6:30. We didn't even start till 7. You're as keen as mustard, my friend. And good evening, gents, says Raj. And Dan says, good evening, gents. Looking sharp. Always do. Wow. Always do. Absolutely. So, look, guys, it's great to have you here. Please put any comments you want in the chat box. Rude, indifferent. We don't mind. Anyway, Ian, have we got a bit of news before we get Mike to join us?
I got a few little snippets from the development press this week. So Property Week tell us that half of big corporations plan to cut office space. So been lots of stuff going on in the media about will they, won't they, and will things go back to normal or will everything sort of change? They studied 258 of the UK's biggest companies and found that half plan to cut their office footprint. In London, 64% of businesses wanted to cut their space, and 1/3 intend to slash their office size by more than 30%. And interestingly, over 1/3 said they expected to keep social distancing as a permanent feature of their office space. So it looks like a little bit of business as usual, but still quite a lot of, I think some of it will change forever. That was in Property Week. In Building magazine, I saw this article it was an analysis by a company called AECOM. They say that London could fit 400,000 new homes on brownfield sites. Obviously, the government's plans, looking to see if they can, build 300,000 new homes a year, but also make the most of brownfield sites. They reckon that, nearly 500,000 new homes could be built on brownfield sites within walking distance of existing town centres. So quite interesting, and that's kind of the big focus at the moment. So lots of scope in London. I suspect lots of scope elsewhere as well. And then finally, I saw this one again in Building. I guess it's a similar theme. We're talking about all of these town centres being rejuvenated, but coming back in a new guise. Legal & General got the green light to turn a former Debenhams in Edinburgh, their Scottish flagship store, into a £50 million boutique hotel. And then there was another business that got the go-ahead to change a House of Fraser building, a similar thing in Manchester. So a lot of those larger buildings being converted from retail into something else. And obviously where that happens, a lot of opportunities for some of the smaller units around there to change as well. So there you go, a few thoughts from the news this week.
Good stuff. So there's the news. And Nicola and Christian, I know you just turned up. So, I mean, you're a bit late, guys. Come on, you've missed the start of the news. We start at 7 o'clock. You know, I tell you what, you want to go to the back of the room and have a word with yourself, because you can't be turning up late to the open door show. You're going to get called out. Right, so we see if Mike is with us. Just got home from work. They said, sorry. Yeah, okay, you need to be sorry. And your apologies are accepted. Hey, you're all welcome. Right, let's see if Mike's with us. So, Mike, are you there? Can you hear us, Mike?
Certainly can. Hello.
Look, Mike, see if you can turn your camera on. Then we'll see if we can see Mike. Well, there he is.
There he is.
Hello.
Give us a hands up if you can hear and see Mike, please. Give us a hands up. Give us a wave. Yeah, good. Good. Mike, look, it's great to have you back. And normally I do a big build-up and a big introduction. But, you know, you've been here before. Although, do you know, I just looked up. It was over a year ago that you last came on our show. And I'll be honest, and I think it's worth saying, I wouldn't want to say it behind your back. Guys, look, what's happened is Mike emails us. He emails our team every week and says, can I come back on the Open Door Show? And to be honest, we try to put him off. But in the end, we've had to relent. So I'm sorry, guys, you're going to have to put up with him tonight. He said he had to come back on. I've asked him in a minute to do a quick introduction about crowdfunding, CrowdProperty, his company. And the last time I did that, he took about 45 minutes, guys. So it could be the whole show, but he said he's going to be a bit briefer tonight. So, Mike, do you want to introduce yourself, your company, and really what it does? Would that be okay?
Thank you for such a glowing intro.
That's good by most standards.
I mean, a year, it's felt like 10 years, Richie. Yeah. Hello, everyone. Pleasure to be back here on Property CEO Open Door. And hopefully, you know, I can answer your questions and focus in on what you want to know about lending, my perspectives on the market, about crowdfunding, about CrowdProperty, whatever you want to know. So I'll be guided a bit by your questions, so you won't be bombarded by 3 hours of slides like often when I'm speaking. So just to give you a bit of a background. I'm going to talk just briefly about the genesis of CrowdProperty and then the wider sort of crowdfunding market. And at CrowdProperty, we thought differently. The founders of the business were developers ourselves, investors and developers ourselves. Between three of us, we've got 75 years investment and development experience. I'm actually the baby in that, only with 19. But what we felt was raising funds for property projects was, quite frankly, a pain in the arse, right? And that was exaggerated after the global financial crisis. And banks just stopped lending, and on lots of reasons, right? Their own risk appetites, but also balance sheet requirements for the capital lending to certain segments. And it was right across the board. You know, consumers were struggling to get loans. Mortgages struggling. Small and medium-sized businesses struggling. And actually, small and medium-sized businesses struggling was the genesis behind Funding Circle founding. And if you've got your own business, you probably received a letter from Funding Circle. I work with one of the founders of Funding Circle and spoke to him a lot in the genesis of CrowdProperty. And we saw exactly those pains, and we thought, right, there's got to be a better solution. So, number one, we said, right, it's awful. We know how it's awful. We know what's important. Build a better lender that suits that, right? And we wanted to underpin it with two things: technology for efficiency, and expertise for effectiveness of lending. That expertise is very different because it's more of a relationship basis, not phone an administrator in a bank and start ticking boxes and have you done that project 5 times of exactly that size in that postcode in the last 12 months. No, okay, we're not going to limit it. So it was ridiculous and lacked the sort of property insight. The problem, however, is if you have a vision to set up a lender, you need to find the capital. So we built a model that would attract great developers because it was a better source of funding. And we then offered that out in what's called peer-to-peer lending, it's a sort of subset of the principal crowdfunding. And that was an opportunity for people to more directly invest their funds in property development. And the phrase I use, which is an awful phrase, I used to be a management consultant, so sorry, but is the more efficient and effective matching of the supply and demand of capital. I can see Richie's eyes rolling with that phrase. What are you talking about, Mike? Right. What I mean by that, okay, is my mother, who has some capital, okay, some money. She is not necessarily getting best value for money investing in many products out there. And what we can do is directly match her funds, okay, the funds that she owns, that she wants to work harder, with a developer that will make those funds work harder. Because in the past, it was she would go and see an IFA, and IFA would say, put some money in this big general fund. That general fund would say, I'm going to put some money into a property fund. That property fund would say, I'm going to go and find some developers, so I'll find a broker to get my money that way. Then they'll find a broker, and all of those guys have profit, and costs and profit. It's a market economy, that's fair enough. We've just stripped all of that out. Okay. So people can get better returns, and developers can get capital more easily, and both sides win, and we do that more efficiently. So that sort of describes CrowdProperty, but actually the fundamentals of the sector of peer-to-peer lending or crowd.
Brilliant. Well, that was very efficient, very efficient.
It was.
Basically, guys, look, Mike's mum's got some money. If you want Mike's mum to lend some money, that was difficult to say, wasn't it? So if you want Mike's mum to lend you some money, say that once you've had a glass of wine, then you just got to contact Mike at CrowdProperty, and then that can happen. So shall we see if we've got any questions for you? You up for some questions?
Yeah, definitely. Could I just add?
Of course you can. You're going to anyway.
One thing, I thought it's too brief, Richie. I'm just going to very briefly mention how that then evolves. Right, that was in 2014. Okay, and over time we built up a very good track record. We backed some really good developers, many really good developers. We gave perfect returns to our lenders, and then a load of institutions come to us, okay, and they say, actually, guys, you're good at this, right? Can I give you some money as well? Now, they're not giving me £500 like my mother is. They're giving me 100 million. And that is one of the fundamentals behind scaling this. What that means is we've got 15,000 retail and high net worth investors and a number of funds and institutions. And what that is diverse sources of capital, many sources of capital. And that meant that we could lend through COVID-19 when so many people had their single source of capital just pulled away from them.
I'm just waiting. Is that it?
Yeah,
I mean, I knew you wouldn't have done it in one hit, but I was sort of mildly optimistic. And quite a few people put in the chat box, he's banging on a bit, isn't he? But you know, I've had to write back and say that's what he does. No, that's brilliant, Mike. Right. We have got some questions. So, Ian, have you got a question you want to kick off with that we can throw at Mike? Let's see if he can answer it.
Okay, there's one here we've got in from Aiken, who asks, is funding available to first-time developers without any track record of property development? And what additional requirements do first-time buyers have to produce to crowdfund?
So, first and foremost, just see us as a lender. Okay, if you're doing a project, just see us as a lender. Don't worry about where the capital comes from because we fund it in seconds. Think of us as a lender, right? And when you come to us, we will look at you as we due diligence, okay? We want to understand that lending capital is going to be safe and secure. Now, where we're different to a bank is we don't basically say it's all about us, right? What we want is to back good developers, and we want you to be a success. And that's where our expertise comes in to say, oh, we'll help you along the journey. We have funded a number of first-time developers. One of our biggest developers, we funded their first ever project, and we've now lent them, I think, about £6.5–7 million, okay, across 5 projects. Okay. Now, why did we lend? Why do we lend to a first-time developer? Because am I not worried about my mother's money? Well, yes, we are very worried about it. Okay. But what we, as property people, we know that people go on a property journey. So at some point, you're doing your first development. But what we look for is more than that. We look at the individuals involved, okay, the team that they're putting together, and sometimes we'll say, hey, look, we get it, we get what you're doing, right? But we think the project has a greater chance of success if you employ a project manager, QS, or planning consultant at these early stages, or whatever that is. Okay, and so it's not because we want it; it's because we say, do you know what? I think you'll do better if you get through, right? And the two examples that I'll give you of first-time developers with big projects. One was a team of two people then, a 30-year experienced architect and a former IT project manager. Right? What's a development? It's project management, right? And so he had that expertise. Philip had the property expertise and the planning expertise. Okay? And we could see not only their technical credential in other fields, but also they had passion, motivation, ambition to create a property a company. It wasn't they stumbled across a development site and said, great, well, let's give this a go now, I'm a bit bored. Right. One other guy, okay, he had a big plot of land in Somerset, and he's just finishing off the project now. It's a final GDV of about £4.5 million. Okay. This was his first project. Right. Now, that land had been in his family. It was in a beautiful village. He had a brilliant vision for it. And he came to our office, okay, to explain all the projects and explain what he's doing. And he literally had an army of in his team of brilliant experts in that field. Okay. And that was brilliant. And we lent in those two examples the first time.
Fantastic. Excellent. Aiken, I hope that answered your question. What's next,
Okay.
Rich?
I've got a couple of questions here which are sort of linked. Okay, so the first question from Paul says, what's the guarantee for the lender? And the second question, which is linked, from Damien, says, one of CrowdProperty's USPs was no personal guarantees. You asked for them now. Why the change in policy? So have you changed your policy? Do you require personal guarantees? And what are they for? I think it's sort of combined questions there.
So firstly, the lending is always, we're senior debt, so we replace the bank. So we take first charge security on the property asset. We do now take personal guarantee. It is standard right across the market. And actually, the fundamental reason behind that, we've actually never exercised on PG. Actually, in the market, in the lending market, it's deemed just that additional, sort of thing sitting over the developer that they feel the pain of, and it's incredibly rarely exercised because there's an asset underneath it, right? There's a first charge against the asset, and actually we brought that in to support big institutional capital, and so this is the scaling element to our business, because we've built a business that's great for SME developers. We want to support more of them. Okay, institutional capital is enabling us to do that, and our business plan in 3 years is lending 300, 400, 500 million. So in the long run, this is a benefit to you as an SME developer to get better product, better lending product.
Okay, good. Ian, there's another one.
Well, I'm going to combine two as well, because there's two here that are sort of on the same subject. One from Paul, who asks, what size of projects do you look to support? And another one from Aiken, his follow-up, can you apply for crowdfunding to generate both the project's asset and development finance costs? And is there a limit to how much of each funding you can apply for?
Okay, great. I'll pick up the second question first. So this is actually a common misconception of development finance market. We fund the purchase and the development work. Okay, and that's really important. So you don't need to get different products for each bit. So typically when we fund a project, I think we funded one this morning in about 19 seconds, kind of normal at the moment, where that will have funded the purchase, and we will have funded up to 70% of that purchase. Okay, and through the project itself, we raise the development finance piece, and we'll fund up to 100% of the cost of that development. Okay. And actually, the guys that I mentioned earlier, who the first set that was their first time development, their third development, I think it's their third. They bought an old chapel in Plymouth for about 250 grand. We funded 70% of that. They then spent 1.2 million, 1.25 million, something like that on the works. We funded 100% of that. That got not far off 100% of costs. It's 95% of costs. And that's just how that sort of ratio of purchase and development works played out. In terms of size of projects, we lend anything from £100,000 up to north of 5 million. And we're as passionate and as interested and keen to work with people at both ends of that scale. So it could be a small student HMO in Liverpool, or 2 weeks ago we paid back 3.7 million, which was a conversion of 5 barns in just outside St Albans in Redbourne. It's actually a stunning build.
Fantastic. Thank you very much, Paul Aiken. I hope that answers your question. Richie.
Okay, so Rebecca asks, Rebecca says, Mike, question for Mike, is there a maximum size of project that I should do for my first project to get funding from you?
No, there's no hard rules. We just don't tick boxes as a lender, unlike everyone else. I mean, literally, it's, you know, what we want to understand what you want to do. We want to understand your vision. We have humans at the end of the phone who might even visit as well, and we can jump on Zoom and we can be two-dimensional, whatever it is. But the thing is, property development is a lot about the individual, right? The best project in the world can be stuffed up by the squidgy human being doing, right? And I'm not applying that to you, Rebecca, at all. What I'm saying is we want to get to know what your vision is, okay? What the numbers are behind it. We will form a view. We will tell you those views. If our view on any project is a no, we will give you the reasons for it, okay? And then that is useful for you because we want to back good projects. We want you as a developer to feel motivated to get the returns from all of your time and all of your effort. This is not buying a buy-to-let flat. This is a lot of hard work, right? So you need to have the economics to pay you for all of that hard work. And actually, we work with quite a few people who it literally takes 3 or 4 minutes to submit an application form, and then within 24 hours we'll give you terms and feedback, and we will have had a couple of conversations with you to understand the project. And quite a few people will submit something and say, hey, look, guys, you know, this is a deal. They don't just send a right, right? These don't. You know, give it some thought, but quite early on, bounce it off us. Because what you want is, if it's a no-go for any reason, you don't want to spend more time on it. Okay? And we'll help you with that. We'll give you, we'll be a second pair of eyes. We'll help you. We've got loads of data, tech, analytics, etc., and also form a view, the real property thing. And then the question comes: do you keep a black mark against my name if I apply and you say no a certain number of times? Not at all. It was very recently we had someone where we said on about 6 or 7 projects, like, look, this doesn't stack for this reason, or there's concern here, or it's listed, your costs are too conservative, whatever it is. We'll help you, we'll give you a view to help you decide. And their 7th project, was a cracker. I reckon they'll make more money out of that seventh project than if they did 3 of the other ones. And it would have taken 3.
Good. Rebecca, there you go. Hopefully that answers the question. Here, what have we got next? I can see lots of questions coming in.
We've got loads of questions. We've got one here from Adair, and there's a few of similar themes. So, how much of my own money do I need to put into a deal?
So as I mentioned earlier, it depends on the ratio between purchase and the total development cost, because we will contribute up to 70% of the purchase of the asset, and then up to 100% of the development cost. So let's talk some random numbers, right? 100k to purchase something, 100k of costs, and it's worth 300k at the end. Right, good deal. We'll contribute 70k, up to 70k. It depends on the profit margin and what's owed at the end, and the length, and there's lots of moving parts, and that's why every sort of project is different. But up to £70,000 for the purchase, and then up to £100,000. So we could chip in 170 for your 200. But again, what we wanted when we were doing development was to bounce a development off someone, get a feel pretty quickly to know whether I should progress it, and that's what we'll do. So you can run that project past us within 24 hours. You will have got numbers off us, and you can say, oh, okay, that stacks up, nice, okay, that works for me. That's how close they got to the 70, or they got to the full 70, and they got to the 400. Right, that's really helpful, and that can help you select those projects.
Fantastic. Idea. Hope that helps. Richie.
Okay. Here's an interesting question from Damien. So he says, Mike, if we tell you we are graduates of the internationally recognized property developers bootcamp, I think he's referring to us, but he might not be. What discount in rates do we enjoy? Question mark. You don't have to answer that one, but if people, we train people, we train people well. Lots of people on here are just guests. They're not all people that we've trained. If someone has been trained, so I'm just going to take a slight angle on that question. Do you like people to come and tell you that they've been trained, or would you rather them not tell you they've been trained, but just present themselves in the right way? And it's obvious they've been trained, but they don't say, oh, by the way, I've got my graduation certificate. What would you prefer?
So banks bloody hate it. Right? If you tell them, oh, I've done this course or whatever, it's like they actually hate it. It's weird. It's ridiculous. Okay. What we want to see is committed people to build a property business, and that is part of the journey. If you spend your hard money, your hard time on learning more and more from people who are more experienced than you and expert at doing it, if you know anyone, Richie, but it's exactly that. We will look at that and think that's great. That's ambition, motivation, and ability to, commitment to learn. That's what we love seeing.
Okay, I like it. There we go. Internationally acclaimed. I don't know if you were referring to us, Damien, but I'm sure you were. I'm going to take that as the case anyway. Ian.
I got one in from Nicola, who's asking about the development finance. And she says, how is that paid? Is it up front? Is it at certain stages throughout? What I'm trying to establish is whether I still need a considerable pot of money, even if I secure funding from yourselves.
Really good question, and a well thought through question. Cash flow is everything, right? So we will release funds to you based on assessed progress of the project. Okay. This is very standard development finance. So say, for example, at the end of the month, the monitoring surveyor will call by and say, great, the kitchen's on site and it's half installed, the timber frames are on site and up, or whatever all the dimensions to it are, and they validate the spend, okay, and then we release that. That is very standard, okay, because otherwise you release funds early to a developer and the only thing that turns up on site is a Porsche. The Porsche is for the end, right? So But in all seriousness, it is standard approach. But that's why often it's trade terms. It's why we place high importance on processing that release quickly, because that then flows straight through to your contractors and your subcontractors and things like that. Paying those people quickly keeps the motivation of people working on your site. And that's really important. And guess what? Banks who are processing drawdowns have zero idea and zero care for exactly those fundamental development, property development elements. It's like, get the funds to the developer. Let's not sit on the report. And the only time that we have not paid a developer within 24 hours of the monitoring report coming in is when we haven't been able, they haven't answered their phone for us to security check their bank details. So yeah, so it's in arrears but swift, and drawdown pains are a massive pain in the industry. Some banks take 3 weeks, 4 weeks.
Fantastic. Nicola, there you go. Great answer and great question.
And I think, to be fair, I don't think you had any intention of buying a Porsche, were you? I mean, maybe a Range Rover or something like that, but I don't think Nicola was going to buy a Porsche.
That's quote of the day.
Damien talked about us being internationally recognised, and he actually says, I'm in Ireland at the moment. Is that international enough for you? Yeah, we'll take that for tonight. We've actually trained people from Germany.
We'll take the Isle of Wight.
Well, Isle of Wight, we could even do that. Yeah, absolutely. Absolutely. Here's a question. It's just 2 questions from David. David put a question. David, pick up your other question. I think this is a quick yes or no. Let me find this one. Hold on. Bear with me. Talk amongst yourselves. David's first question. All I need is a yes or no on this one. Would you consider a development of 100 tiny homes?
Yes, we'll consider everything, and we'll give you a view on everything.
There you go. David, he would, and I think David, I'm pretty certain, David. I'm sure I've met your mother. I don't know. I might be completely wrong. Manchester way. Am I right or wrong? But I think you develop microhomes. I think you were doing something like that. I might be completely wrong, but if that's you, David, good evening, welcome. And David's second question is: do you have a standard rate percentage that you charge for lending?
Yeah, so it's not a standard rate because it depends on type of project, the LTV, the LTGDP, the profitability, experience, all of that stuff, right? But to give you a guide, our projects are between 9 and 11% annual interest rates, and that is basically, if you were a developer borrowing 20 million and could sit around for 6-7 months waiting for it, you'll beat that with Lloyds Bank. But what we want to be is competitive in the SME marketplace, so that is cheaper than bridging and almost all development finance, or there or thereabouts. Okay, and because we're price competitive, we price benchmark all the time because we want to see the best project. So it's in our interest to keep that pricing.
Good. David says, yes, I'm the guy in your Facebook group. Yes, the same guy. I knew it was. I mean, I'm getting old, but I've not got a bad memory. And he says, great answers. I think that's from you, Mike. So that's the thing. He says, I'd like to set up a meet when convenient. I don't know whether that's with you or me, Mike. I mean, but David, just message us. Mike's going to give some details at the end of the show. If it's not me, well, so be it. If it is me, message us. We don't mind. Here, what have you got next? We've got plenty of time. We've got plenty of time. This is good.
We've got one in from May, and I think you might just have covered it in the last answer, Mike. But she asked, what do lenders get back in terms of profit ratio and margin? So I think that's asking, yeah, if obviously on one side you've got developers that are taking money from you, you've got investors who are lending the money into development. What do the people lending money get back?
So we so effectively, when my mother lends, she will get between 7 and 8%. So the gap there between 9 and 11 is what we make, as well as there's an arrangement fee as well. But that's what runs our business. And the great thing about that is that we're an HMRC approved ISA manager, so you can put that in the CrowdProperty ISA to get tax free. You can use SIP and SAS pensions for that as well. Both of those methods, ISAs and SAS pensions in particular, are very, very popular. Our average our average returns for the entire time we've ever lent to investors, I think, is 8.39%. So how does that work if it's between 7 and 8%? Well, the way it works is that development loans sometimes go long, they sometimes are short of the end date. Okay, and I haven't looked at this. I should do. I bet in 300 plus developments we've never been paid back exactly on the contracted end. I bet, right? If it goes a bit late, we are always making the best decisions for the capital, and we're working with the borrower. And the way that's different to RBS in 2009 that just said, oh, the best route is just to repossess and fire sell everything. We know that the best route to getting the loan back from the developer is to support the completion of that development, right? There's a very different attitude coming from this, working with developers, property people, and that's good for the investors. But if it does go late, then there's that 7 to 8% return goes to, I think it's 9 to 10%. There's a bit of a premium for that inconvenience.
And people are lending, Mike, on specific projects. So it's not like a portfolio thing. You're actually lending on specific projects.
And that's really, we've always had, because we're sort of property geeks, right? We've always had that what we call self-select model, okay, where people can look at the project and choose to lend to that project. The really interesting thing is that about 2.5 years ago, we observed two different patterns of investing on our platform. Some people who like to pick, so they would look at all the details. I mean, this is after we've done all of our due diligence and found the best, right? Then some people will say, right, I like that one, I don't like that one as much. I like that one, I don't like that one as much. So they'll choose, right? The other segment, dominant segment of investing on our platform was people that are saying, right, CrowdProperty know what they're doing. They've proven that over many years. What I want to build is as diversified a portfolio as possible. So I'm going to put a little bit into every single one. Okay. That diversification practice is actually a really good thing to do. There's something like 80% of our capital, or no, I think it's 90% of our capital now invested is across 10 or more loans, which is good investing practice. Diversified, and so we set up an auto invest function where people can preload some money and say, please spread it. The biggest problem with CrowdProperty at the moment is that on the investment side, it's incredibly popular, both for retail high net worth investors and also our institutional lenders. There's more money than there are projects. We've funded 134 million pounds now, backing over £250 million worth of projects. We did about 8.7 million of lending last month. We might hit 10 million this month. So we're giving enough opportunities. But the crucial thing is we have a quality threshold. We've never relaxed our criteria, and we select good projects done by good people. And that's important for both sides of the market, because it's good to attract capital, but it's also good for future borrowers where that capital is always there, and it's a big virtuous circle. So and the final point on that is if anyone's ever met Andrew Hall, my co-founder, one of the co-founders, he's 36 years RICS qualified. And he's grumpy. So he
grumpy business partners, well, whatever next.
Yeah. he's ultimately, he's very, very critical, but grumpy and critical from a knowledgeable perspective. And that's a huge amount of value. And we've got a team of 14 in the property team around him, and our total business now is 43 people in total. So we're really well resourced and doing this properly.
Fantastic. May, I hope that answers your question. What we got next, Richard?
I've got the very last question for you there, Mike, because we're going to run out of time otherwise. So last question from Raj. Raj, you win the day. Guys, I know there's a heap of questions that have come in that we haven't answered, but Raj's question is, are there certain types of project that you have a real appetite for to fund, i.e. conversion, new build, sectors, etc.?
It's really interesting. No, I mean, the answer is no. We fund any type of property project, and including, bridge facility or auction finance facility or whatever. I'm going to answer that in a slightly different way. What do I think is hot at the moment? We saw a surge in air rights applications following the permitted development change. I think that's sort of softened a bit when people realised, okay, it's not you can do anything suddenly on top of a building. We're going to see an ongoing underlying trend towards modern methods of construction, and that's actually a really, really difficult thing to finance. I mean, we actually launched the first dedicated modern methods of construction funding product in the market, because how do you secure? You have to pay for things, raw materials going into a factory. How do you secure against the product that's in the factory? Loads of complexities in it. But it's really not a preference. And sometimes people think, oh, you just do sexy projects. It's just that they get liked on social media and they get more distributed. But we don't like them any more or any less than any other project. So really what we want to do is back good people doing good projects and ultimately be a funding partner for life, because you get to you'll grow your property business quicker by working with same architect, same planning consultant. And then finally, there's a reliable lender that you can put on your power team that can work with you for life.
There you go, Raj. Do anything you want, build that relationship, and you're there. Mike, that was absolutely brilliant as always. Give us a wave if you enjoyed that this evening from Mike. Give us a wave. Oh, that's unusual. Not one person's wave, Mike. No hands up at all. That's outstanding. I mean, I can't believe that no one was interested at all in that. Only kidding. We had 2 hands that come up out of all the people. Mike, are you happy to give some details? How can people contact you if they want to contact you, your team or whoever? What's the best contact details?
So the 2 best things, okay, are number one, if you've got a project to bounce off of, go to crowdproperty.com/apply. Right. There's an application form there that is 12 boxes. I got pissed off with filling in 20-page buy-to-let mortgage application. I could underwrite mortgage application with our tech system with just a postcode and a door number. Okay, it's the basic information so that you can submit that in 3 or 4 minutes, and then we'll help you, we'll phone you, we'll speak to you, we'll understand your vision, and just have a view and have a conversation, a property conversation. If you want to run anything past us, that's the best way. Otherwise, do connect with me on LinkedIn or follow me on LinkedIn, and drop me a message on that. I'm very happy to chat through anything. I'll put you in touch with the best people in the team to tackle whatever your questions are. And follow CrowdProperty as well across LinkedIn, Facebook, Instagram, Twitter as well. But do reach out. We're here to help. Anyone passing through Birmingham, drop into the office. Anyone's welcome.
They'll all be there tomorrow. Mike, look, great stuff. Mike, if you can drop through to our team your contact details, and we'll get those put up on the show notes. So it'll all go up on the show notes for next week, so people can contact you through there. That'd be great. And obviously, if you can give us your mother's details, that'd be terrific. So if anyone wants, we'll put those details up. Anyone wants to speak to Mike's mother about personal investment, she'll be happy to do that.
She phones up and complains. So when projects, I mean, all projects just disappear in seconds, right? And so she's on the phone saying, I couldn't get into that one.
I can believe that. It's not a conversation that I would want to have. Mike, brilliant. Thank you for coming along. We'll try not to leave it so long next time. It's been thoroughly enjoyable. Yeah, hopefully you enjoy it. I'm sure all of our guests have. So, Mike, enjoy the rest of your evening. Thank you very, very much.
Thank you. Really appreciate it.
Take care. Fantastic. Wasn't that good?
Tom on the phone complaining now. That's unbelievable, isn't it? That's unbelievable. Guys, look, hopefully you've enjoyed the show. As always, let us know in the chat box if you've enjoyed the show, because if you don't put any comments in there, I'll tell you, we won't come back next week. We won't come back. Hopefully you've enjoyed Mike. Great value as always. We will put his details in the show notes. The show will be up on YouTube normally by Monday. And all the recordings of all the back shows are there. I think this is our 52nd show, something like that now. So lots of other guests. In fact, Mike was on Open Door number 5 over a year ago. So go back and indulge yourself with more Mike Bristow if you want. Next week is Thursday, the 17th of June at 7 o'clock. Hopefully that would be a bit of fun as always. If anyone out there is interested in property, we are running a 3-hour free free event on Saturday, I think it is, isn't it, Ian? Saturday we're running an event.
Saturday, 9:30 till 12:30.
So if you want to come and spend 3 hours with me and Ian on Saturday, and not physically, obviously, because they'd be overcrowded here in the studio, just go on to propertyceo.co.uk/roadmap. Okay, so /roadmap, and that will get you to link to a free 3-hour event. What's not to like about that? Ian, have you enjoyed it?
I've loved it. It's good to see Mike again, wasn't it? And always good to find other sources of funding away from the mainstream commercial lenders. So yeah, good to have a choice.
Good stuff. So what do people say? Let's see if they've actually enjoyed the show. So Atkins says, thanks, chaps. Another open door session, always worth joining. Well done. Thank you for joining. David says, great session. Thank you. With a smiley face. Yes, nice. Says Callan, it was great, says Christian. Thanks, Mike, for your answers. He's gone now. You can't thank him now. He's gone. Paul says, yes, great session as always. Thanks, guys. Love the show. Great work. Thanks very much, says Paul. Oh, blimey. Teresa says, I missed a bit. Missed a bit. Where were you, Teresa? Come on, girl. It's due to a meeting, but I got good info. Cheers, Richie and Ian. Yeah, I'm sure you got a good info. Charlotte says, great show. Jackie said, I loved it as always. And Stephen says, look forward to seeing you next week. Stephen, we look forward to seeing you and everyone else. Same time, next week, same place, 7 o'clock. Bye.
See ya. Bye.